I am I am in awe in the true sense of the word that we are in the middle of this enormous capex build out that is going to change our economy. I think the estimate from Bain is that there's going to be $800 billion of investment into AI chips, data centers, energy, like things like that, a year for the next few years. This is enormous, right? And it is by order of magnitude the biggest investment in capital expenditure in the history of the United States. Like this is going to be bigger than building railroads across the country in the late 19th century. It's going to be bigger than electrification.
Welcome to Tools, Talents, and Techniques. Today, my guest is Vijay, and he has a book called, well, first of all, Startup System is basically his platform, but I'll let Vijay introduce himself briefly and say a little bit more about what he does and his book that came out in March.
Thanks, Dustin. It's great to be here. Delighted to talk to you about the funding framework, the book that I published in March, but also the startup system, which I think of as this set of things that great founders and leaders in high growth startups do well, which is this connected set of things: fundraising, go to market, or founder led sales, and also building great teams.
Yeah, there's a lot that I want to ask you. As many of our listeners are aware, I've been working on a startup called Ranges, which are wearable rangefinders for golf. And the whole journey of starting a company and the learning process and what is funding and the difference between VC and angel, and knowing that a product is not necessarily, well, an idea is not a product, is not a business. And these things are all disparate. So before we jump into everything, could you just give a brief snapshot of your origin story? Like how did you get to this place?
Yeah, it's been quite a journey and it started for me when I was in college. I had the opportunity of working for a firm that was in a category that hardly anyone knows about called venture leasing, which was basically back in the day, if you wanted to start a website in the 90s, you needed to get your hands on a server. And then you would like host it on your server. There was no cloud, there was no AWS or anything like that at the time. And then maybe it would work well, and then your server would crash, and then you need to buy another server. And these cost a lot of money. And so we would lease them to companies. And I was just fascinated. First of all, this idea of underwriting credit for companies with no profits, but also the different business models and ways in which creative entrepreneurs were building new types of businesses. And I caught the bug then, and then continued working in the startup ecosystem in New York. Later, after graduate school and a stint in consulting, started my own company in San Francisco, focused on e-commerce. Spent some time in human-centered design for a design and innovation strategy firm called Jump, and then went to a corporate setting to help launch what was then a digital group to build, buy, partner, and invest in fintech. Invaded a bunch of companies and was also the interim CEO for one of the first digital banks for small business. And then spent 5 years in venture capital with 500 startups, also known as 500 Global, building accelerators and incubators around the world, and working with a bunch of different partners. So my experience as a founder, working in corporate innovation, being in venture, looking beyond just what's happening here in the San Francisco Bay Area, but to different innovation ecosystems around the world, led me to publish my book, do the kind of work that I love, which is coaching and supporting the founders I work with, and that in my own way is my story of basically being of service to entrepreneurial leaders.
There's a lot to unpack there. Thank you for you packed a lot there. I want to unpack some of it. So when you first got started, when you said you caught the bug in doing this, did you find was the main proficiency that got you into this world? Were you good at like math or science, or what was it that you said, this is my strength, I'm going to try to go into this field?
Yeah, I think my strength came from this idea of connecting the dots and asking what could go right, and but also the discernment for what are non-starters and what could go wrong. And I highly recommend for people who haven't tried it yet an assessment called Working Genius, which looks at what are the areas that you just light up and are gifts, and what are the areas that are natural frustrations. You might actually be quite competent in these areas that are frustrations, but it's the stuff that you avoid. It's stuff you don't like. It's the stuff that someone else in your team like shines at, but maybe is not your thing. And it's important to know our strengths, and also they might necessarily be weaknesses, but the things that like frustrate us. And when you can really turn on those strengths, and so for areas of Working Genius, which for me are intention and discernment, then that's what comes together, and that can look really different. That could be doing some deep research and like listening for what an entrepreneur is trying to do. It can be, synthesizing and communicating different ideas, and figuring out how a product can be commercialized and become a higher growth business. And also looking critically at like, hey, what's happened here, and should we underwrite a certain type of risk? And so getting the exposure to that when I was very young was good, and it just kind of happily worked out that I took this like strange sort of opportunity at a time when I might have gone down a more conventional corporate path.
Was there anybody that you worked with early on that you looked at as a mentor or somebody that showed you the initial path?
I don't know if they showed me an initial path, but I've been lucky to have a number of mentors in my career who were able to perhaps help me to refine certain skills, whether it was in quantitative analysis or the way I wrote or something like that. When I would just have the energy to say like, okay, great, I'm just going to like do this thing. The what it looks like to go well is very different. I think what stands out is, yes, like a couple of mentors when I was early in my career, uh, you know interested in how can we um, how can we create like a marketing plan for a new startup, because I was working for an agency that did some of that in New York. And there are people who I worked with. I just learned a lot, and they get to just like show me the craft. And I think that's something that is rarer and rarer in today's world, and particularly now when um, you know younger folks may come into a landscape where they're just expected to know a whole bunch of things. I'm lucky in many ways that I had a few people who were both like training and just generous with their time in showing me how they did things, and really underscoring what good looks like.
That makes sense, and that draws me back to what you said of being of service. And I find that a lot of times when I speak to people and I talk to people, like they develop this from their interactions with other people. They see how valuable it was. Well, not always. Sometimes it's like, hey, nobody was there for me, so I'm going to do it for other people. But I do find that there's a trend of people that have had other positive influences in their careers and in their lives that they see how that works.
Yeah.
Good begets good, so that
Yeah.
makes sense.
Right. And I think another thing is you can learn a lot from others' experiences. I did about resiliency. So when I graduated from college, it was like a month after the stock market crashed. And long story short, things didn't like go well. But this idea that you enter the world and everything is going to be up and to the right is not the case. And so folks that gave me on what it was like 10 years earlier to manage their career, out of a recession or something like that, was super helpful. We are in a very, turbulent economic environment today, and that's something that people should be mindful of. Is it's going to be all right, and you are more agile and nimble than you think in terms of finding your way through this.
That ability to have perspective and be agile, right? But
Yeah,
also be patient,
yeah,
and I love what you said before about connecting the dots too, about figure like sometimes you just have to sit back and reassess and look at the landscape and see what your next step should be. I would love for you to, because a lot of times I'm trying to get better at this podcasting thing. I'm having a great
yeah,
time doing it. And sometimes I spend a lot of time on somebody's background, but I feel like if we jump into your book
yeah.
and we start talking about that, I feel like that would answer a lot of the questions. So Tell me about when you came up with the decision to write the book. What was that process like, and how did you come to that decision
Yeah,
that you think
I
this is
decided I
working?
wanted to do it 2 years ago. Writing a book had been, a thing I really wanted to do for a long time. And I found, that I wanted to put together a bunch of ideas that were almost cyclical and like a pattern every time I was going through helping one of our portfolio companies at my former firm to raise money. Like it would be the same thing. They wanted to go do this. They would ask like a bunch of questions. They would go do the wrong thing, and then would have to pull them back. I'm like, why didn't that work? Okay, let's try something else. And the number one thing is, you know, what people think raising money is about knocking on doors, and people who are in the business of writing checks are going to write one to you because that's what they do, and they just need to experience what you've experienced. In reality, it's a little bit different because the first question you should ask in terms of like how to fundraise is not who but what. Because if I'm a typical founder, particularly first time founder, I'm going to come to you and I'm going to say, Dustin, who can you introduce me to? And instead of like that, you want to start with a powerful and compelling story of what you're doing and why it should exist in the world, and then fit that later to the people for whom their thesis, their background, and their identity is very much aligned. And the reason that matters is because these are folks for whom what you're building is very on thesis, and they, particularly among angel investors, want that to exist in the world so badly that they're not really that bogged down with whether something is going to turn $1 million or $3 million of annual recurring revenue by year 2 or year 3. It's really almost something that they're passionate about seeing you win and about the idea that you have. And so that is sure the angel stage. And it's different at the institutional stage, like when you're taking a check from either an accelerator or a a venture firm, because at that stage you're trying to tell a story that is on thesis for these people, and it matches a pattern they've seen before of what works. And what that ends up looking like is almost like an enterprise sale where you're doing outreach. And then finally, the idea that I just need to meet the right people and they know how this is going to work, and then the money's going to come, like, doesn't actually work. You need a process end to end where you are driving in a very short time frame a whole bunch of meetings, a whole bunch of second meetings. You're finding a lead. You're like closing up the syndicate and closing the round. That's the final part of the funding framework, is closing with confidence. And that is something you have to project manage aggressively by yourself, rather than assume that it's going to just like come together magically and automatically at the end. So storytelling, great organization, outreach, and finally closing with confidence is the way you secure funding.
So that storytelling piece of it early on, and this conversation and talk from that personal perspective, I know, and
Hmm.
how frustrating it is. It also, and I'm not alone. Like there's been so many people in accelerators and incubators, and that's why this is, you're hitting the nail on the head here. It's so frustrating, and it's hard not
Hmm.
to take it personal when
Absolutely.
it's like, this is your story and this is like your idea and this is all the work that you've done. And people are like, yeah, you're too early. Yeah, because this and that, or you need this. And as much as not just myself, but the other people that I've seen in the startup world are putting in, it's like, how to deal with that frustration and how to make the necessary adjustments, but also you're getting feedback from multiple sources. How have you seen, or how have you helped guide folks that are trying to make those decisions and try to serve? Because maybe as you said earlier on, like it maybe comes natural for you, but people that are trying to do that and say, okay, this is how you separate the wheat from the chaff. This is how
Yeah.
you
Yeah.
separate this, and this is how you focus on what needs to move the needle.
You know, it looks natural, but anyone who's practiced long enough starts to look natural, right?
Mm.
Like you watch someone like Michael Jordan play basketball and you think like, oh my God, he's a natural, right? But actually, you know, it's the product of thousands and thousands of hours, right, of practice. And I think that's something I'd like to dispel, that fundraising isn't something you just have or don't have, or just like comes to people. I think it is actually a learned skill. Much like sales, much like hiring, you can get better at it. There are some people who are still exceptional at sales and hiring and better than me at it. But I know there are things I can do to get incrementally better, and those incremental benefits compound. So what I would suggest is think about how to develop the fundraising skill, and how that can start to develop is actually kind of counterintuitive, because we think that fundraising is pitching. And that's what we do. It's the pitch, and people walk into the Shark Tank room and they do this and that, right? And and in reality, fundraising looks like listening. It looks like asking almost an equal number of questions to the investor as they ask of you. Because what most people do is there's this power dynamic where, they're like coming into a room or getting on a Zoom call and they're like, "Hey sharks, have I got a deal for you?" Right? I'm exaggerating slightly, but but basically they're just like, "Oh, here's this thing." And then you sit back and then wait for the slings and arrows to come. And I think that is like the wrong approach, when in fact you want to like start and talk about, what are some of the things you're interested in? What made you want to talk to me today? What are the patterns you were seeing in this market? Here's what I'm really excited about. I'm not going to go through the deck. I just want to jump around and talk about particular topics. What would this need to look like in 6 months for you to be excited and invest at this stage? You're asking a whole bunch of questions about their process, about how they work, about okay, and then after you get to investment committee, how do you make a decision? Do you follow on? Basically, you're asking them a whole bunch of questions that get at, why they should care and why you should care about them as investors. And what can you do? Can you do for you? How do they like to help and support the portfolio company? Is it with talent? Is it with, customer introductions or something, right? That is super critical, because it changes the dynamic, changes the relationship. You start listening and then they tell you what matters. And this is true in other fields too. I try and show founders to listen carefully for the things that the potential customer is going to say. So, to cut costs, we've outsourced this. We have decided we need to increase scales in this segment. We don't have an AI strategy, whatever the thing is, right? They're going to tell you what's going on, what are their pains, frustrations, hopes, dreams, and all this sort of stuff. Investors are, think they need to come in and they need to ask a lot of questions. They need to show they know everything, even if they don't. Sometimes they do. Sometimes things might be new. Your job there is to help them, and you help them by being really, really keen to just start a conversation, start a relationship, and see is this somebody that you want to be partnered with? And it's just a completely different vibe and a different pace of the conversation when you can be listening as much as you are quote unquote pitching.
There's a lot of wisdom in what you just shared. And one of the things that I noticed is that with these insights that you have, were there, when you're like, "Oh, this is how it's best done," were there specific moments where there was a light bulb moment when you saw somebody doing this or performing in this way that you were
Yeah,
like, that's it. That's how
yeah.
that's how you do it.
There are a collection of anecdotes in the book. The names are being changed to protect the guilty. To what people have done is all kinds of things. Say, I'm not pitching with a deck. I don't have anything to send over, right? So this is and this is where organization matters, right? People are oh, I just need to start. I need to get a bunch of meetings, and then I'm going to have this thing. Oh, I'll have a data room later. We're at this stage. This is not sprint and build and just in time. You actually need to have a bunch of things organized, or separately have a structure and an idea of how you want to run the meeting, as opposed to some people are just oh, I'm just going to send Dustin a product and he's going to use it and then he's going to fall in love, and then he's going to be okay, great, when can I wire you $1 million? That in reality, I could say, oh, that's a neat product, but I don't. That doesn't mean I connect the dot to this being a valuable enterprise yet. So there are plenty of examples and things in the book that tell the story of how real people have done things wrong, and how some people have figured it out, where they they had a lot of inbound interest from investors and said like, and kept saying, I'm not raising right now. I'm not raising right now. Oh yeah, yeah, sure. Like they created FOMO in some instances, and sometimes that was worthwhile.
Okay. Well, listen, you just sold another book because I need to read it. So with one part of like where you're at now and you doing this, so who are the types of folks that you identify mostly as your potential clients? Like where are they
Mhm.
in the in the time frame of startup?
Yeah, so they're usually post product and post revenue. They are between seed and Series A, meaning that they are at or getting to product market fit. And then they need to think about both raising capital, how they're going to step back as a founder, maybe open up new segments and scale their team. And ultimately, think about how do we create a functional organization that's successful. All of this is changing with like leaner teams in the age of AI and more like tools and agents and things like that. You're thinking about how you want to set the communication architecture and systems for your company don't change. That is still something that you want to be intentional about and can set in motion.
You mentioned the shifting environment right now.
Yeah.
Actually, I worked for a tech startup a few years ago, and it was fun. Like right at the time when I joined them, it seemed like the thing started to shift. I mean, still did a 17 million Series B raise, which I mean, that was pretty good. And that's the my first exposure to it. And people kept saying like, "Oh man, like a couple years ago it was crazy. Like money was just flowing in." Right now, behind the curtain, are do you see like a tremendous shift, or is it just peeling back?
Yeah, I think it's a tale of two cities, is what I tell folks all the time, right? There are a handful of companies that are getting a lot of attention and of course hundreds of millions, if not billions of dollars in funding and quickly on their way to becoming the next like um magnificent seven or whatever set of valuable AI companies because of the amount of like energy and hype and the build out that is happening. And at the same time, there are companies that you know, uh, either they raise a lot of money in 21 and they're trying to hang on and maybe shift their business model and not get into a down round or figure out how they're going to grow into that high valuation of 4 years ago. Or there are companies that maybe don't have the narrative of today's hype cycle. And that might mean they're doing something in climate. That might mean they're doing something that, is in quantum, or maybe it could be too far out, right? Like, so things have shifted where some things went out of favor, some things, are not yet in favor, some things were out of favor, now back in favor, like crypto because of like regulatory changes. And so yeah, you see a whole bunch of different things. Like you might be pitching a consumer product, and people just like are not into a consumer right now, and that's I think the flavor of the month kind of quality to like startup investing is unless you're going to talk to someone who either cares passionately as an angel investor or it's super on thesis for them as an institutional like venture capital firm, like they're not going to get it. Right. Like there have always been people who invested in semiconductors and chip technology. And maybe a couple of years ago, they had nothing to do. But then, ChatGPT came around, NVIDIA popped, like all kinds of things happened. And now those like chip and semiconductor investors are super busy. The same has been true cycle to cycle in other sectors as well. So I think that is something that is hard to grok if you haven't like seen it over a few cycles or watched how those types of companies fare, because you just assume all startups are startups and they're all like kind of the same flavor and therefore like are going to be like popular at any given time if the metrics are relatively good.
There's so many different things that I've learned over these years that I think people told me, but I
Hmm.
didn't really understand until I was in it. Well, number one, just starting a company,
Yeah,
like building something and being a startup founder. People are like entrepreneurship, this and that, and you're like, yeah, I've done hard things before, but this is different.
yeah,
This is a different type of hard.
yeah. And how do you explain to people who haven't experienced it personally?
I do the same thing that other people did to me. Like, it's really hard, but it's hard to explain. Like there's
Yeah,
an essence to it. There's a
yeah.
like
There are Right. And there are all kinds of crazy metaphors. People will say, oh, yeah, entrepreneurship is like eating glass. So, entrepreneurship, being a founder of a business is like getting punched in the face every day. Pick your favorite, like, usually like uncomfortable or even violent metaphor that people like. I like to say it's a roller coaster. It's scary at times, and some people throw up. Like, it is like physically jarring. But maybe you like roller coasters.
Yeah, it's thrilling.
Maybe
Like
roller
there's
coasters are for you.
the highs are extremely high. The lows are like, what the fuck am I doing? Well, I hope I don't have to put explicit on this episode, but like, it's like, what am I doing? I was like, what's going on?
Yeah.
Um, but what's even harder, I think, sometimes is when you're presenting, and this is where I think it gets personal, where I have this thesis, I have this idea, I have this people say, well, like you need this and that. Okay, do the C Corp, get the provisional patent, get the utility patent, get the design, get the hardware, like do all these things. And people are like, yeah, you're still early. And it's like, and how do we know there's a product market fit? And this is specific to this. And then people are like, yeah, I still don't see it. And then you start seeing other people in the market coming up with it. And it's like, well, I'm glad I got the patent and glad I did all those right steps, but it's like they're proving out what I'm saying, even though I think ours is better than what they're putting out.
Hmm.
It's
Exactly. So, yeah, right. So you are doing all the right steps because people said, oh, you need to have done these things. But, you know, what they want to see and what they're not saying is I want to invest in a business, not in just a product. Or I want to invest in something that, is this degree of post revenue. And there are other people out there who are just like, nope, that's okay. We want to invest at this stage, but it's going to be at like a valuation that suits us because we're this kind of consumer incubator, accelerator, whatever. And so I think that is the thing. It's like people who are not comfortable with that kind of like early product risk or early market risk are just going to like say that. I remember my first company was in the food space, or an e-commerce subscription service. And the crazy thing is, people would like compare, like food businesses, they need to be at this stage and have $800,000 in sales. And so I'm like, I'm not selling cookies, right? Like we're actually like focused on commerce, and we're focused on creating like a different type of like buying behavior and category. And then that's where some people get excited, and you lose some other people who are just like, oh, you're creating a category, like, okay, so this is not real yet, this doesn't exist. Yeah. Whereas others are like, okay, yes, I see how this can be a thing. Right. Like what a founder of a successful dating app company said, oh, yeah, this is like the kind of business I like to invest in. And other people are like, oh, yeah, you'll just get crushed by Amazon. It's very hard to convince people who believe certain things not to believe them. It's just way easier to figure it out. And sometimes feels like getting punched in the face, but like person by person, like folks are just inclined to believe because they want this to believe, and maybe their life experiences are being different, where they see, yeah, this, I've seen this could work before, right? And they're pattern matching to like some other success story that is their point of reference.
Yeah, well, fortunate for me, I have been punched in the face before a lot in my life. I mean, literally and figuratively, just life in general and done stuff, and then also literally getting punched in the face. So, like, I know that there tomorrow's another day, and you still had to build. But the frustrating thing that is nothing that can't overcome, but it is frustrating, is that there's certain things that just can't change. There's certain things. Early on, somebody told me, listen, he's a friend of mine. He works in the private equity space. And I brought this to him, and he said, listen, you've never built a product before. You don't come from a technical background. You don't work in the golf industry. You're self-admittedly not that great at golf. He was like, no one's going to fund you. He's like, no one's going to fund you. He was like, the best thing you can do is take these steps, like build a team, build the software, build the hard bootstrap, get as far as you can, get your patent, get your C Corp, do all those things. And hopefully down the road, you're far enough where somebody believes in you. And that for me was like great advice. It hurt, but because there's certain things I can't change. I can't like be from a technical background. I can't
Yeah.
I'm a first time founder, and that's just how it is. And so those are the hills that I have to climb over. So as hard as that is and frustrating as it's like,
Yeah.
that is what it is.
I think a lot of investors shy away from giving feedback because they don't want to offend people. They think that if they tell you you're not just the idea is bad, but this won't work and this won't work, that, people will have a negative opinion and share that negative opinion of you as an investor. So it's usually rare in venture and in like a typical venture capital firm that people are going to like tell you why I don't think this works. Candor, not like respectful, right? Like not me not being obnoxious, but like candor is a form of kindness.
He's a friend of mine. He wasn't
Yeah,
somebody that I was reaching out to, like that I found on a VC list. I know he works in this area, and I was like, hey, I want to run something by you. So yeah, I think I needed that. I wanted it.
yeah,
I need
yeah,
that because how do you change? How do you make better decisions unless somebody's going to be honest with you? Then
yeah.
then you're
Oh, of
lost
course.
again.
Yeah. And I'm really glad that he gave you that gift of perspective, because trying to like fix our companies based on what we can see is like it sometimes is like trying to, give yourself a haircut, right? Like it's really, really hard.
Well, it's easier for me because I don't have any hair.
Right. My the thing is like you get that help sometimes from folks on the outside, and it can be transformative and save you like months of agony trying to get to the right answer. I mean, you need your own filter for what you want to particularly focus on, and what advice matters. But yeah, having those sounding boards and having that outside perspective is invaluable.
Yeah. And so going back to one of the things of finding people that match, that kind of mirror what you do, and having people. So that's something that people told me earlier on. Like, you need to find an angel investor that loves golf, that loves technology, and does that. Those are the people. Then it's like, all right, now we got to find we got to find those
Hmm.
people. So,
Yeah.
and that's a part of the process. So,
Right. I was listening to a podcast. I'm sure your viewers know, the Knowledge Project, and
hmm,
yesterday I happened to be listening to an episode that was talking about the history of Dick's Sporting Goods, and I I knew nothing about the company, but the current head of the company, or the person who took it public, a second generation owner of the business and the son of the founder, like he took a lot of bets early on no name brands, because that others didn't want to be first to look at, because he's like, well, we're not like number one in the market. We're not like the like some of the other leaders, like let's say Sports Authority, or folks that were all over the place at the time. Now we don't see them, but you know he took a chance on Nike. He took a chance on Under Armour, right? And put these products in his stores, because that's what he did. And so again, he was the exception, right? To like trying out the sportswear brands or shoe brands, because the conventional wisdom was, well, everyone wants to wear Adidas, or no one's heard of Under Armour. Why will they buy the shirt, right? But if you can see, hey, this is the best running shoe, or this is no one else has this kind of shirt, like that's what makes it special. So finding somebody with that mindset is actually rare, not common. And that's what entrepreneurs need to do, is find those weirdos that like to stock different types of products, or be the customer for your newfangled thing, right? Because those weirdos are the early adopters in the product adoption curve. Like they are the ones who have a strange need or a weird fascination with something, and want to like see something like this exist in the world. It works for finding customers. It works for finding angels. It uh, can surprise you, where if you're focused not on the mainstream, not on the like famous names that you'd like to work with, but instead like the people with an unconventional like habit of doing things, and working with folks like you, then that's good.
I love that. Find the weirdos. I just need
Yeah,
to like we're plotted on the chart and the
yeah,
bell, and like just find those folks. I love that. That makes so much sense. As far as the industry, just the overall landscape. What's your general temperature? Like, how are you optimistic? Are you it's going to
yeah.
take a little longer for this to all suss out? Like, what's your general feeling of everything?
I am I am in awe, in the true sense of the word, that we are in the middle of this enormous capex buyout. capex build out that is going to change our economy. I think the estimate from Bain is that there's going to be $800 billion of investment into AI chips, data centers, energy, like things like that, a year for the next few years. This is enormous, right? And it is by order of magnitude the biggest investment in capital expenditure in the history of the United States. Like this is going to be bigger than building railroads across the country in the late 19th century. It's going to be bigger than electrification. So adjusted for, inflation and all those inflated dollars, like this is huge. So we're experiencing that. And what that means is not that all this stuff is going to make money, but that it's going to create a different type of economic landscape in the same way that all the investment in new hardware for Y2K and deployment of fiber in the early 2000s created all these different things we never imagined were possible, like streaming and mobile and cloud and marketplaces and different things that we could all do and live our lives in really unique ways that wasn't possible before. And I think that's, what the next 10 to 20 years is going to allow us. So trying to think very optimistically about where to skate to, where depending on the puck is going. Now, there might be some things that don't pan out, and there's a crash and burn and an economic cycle where there's usually a debt crisis somewhere in there. That happens every 10 years. But thinking in terms of like waves and cycles and mega trends, like I'm overall like very optimistic.
I don't want you to repeat that, but I want to make sure I completely understand, because that was such a big statement. There's going to be $800 billion per year for the next few years that's going to be invested in AI applications, infrastructure, and it's going to be bigger than the railroad system, the electrification of
Yeah.
the, that's big, bold statement.
Yeah, no, I mean that's the forecast from Bain, and again, this is going to take energy. It's going to require us to build power generation, like a whole bunch of different things that we didn't have before. We're going to need new chip foundries. The scale of investment is enormous. It could be something happens and 2.5 years from now, this all like stops. Like the current pace of investment is greater than scale wise the building out of the railroads or the electrification of the country.
That's unbelievable. It makes sense though, because I've been, involved and interested in using AI for a while now, and I use it in just about everything that I do. Even like can edit this podcast, even edit an episode, and for work, for personal things. It helped me plan a European trip before my family.
Very cool. Yeah,
yeah, it's everything.
Absolutely, it is there. And increasingly, it's going to go back into the background. We won't pay close attention to it because it's just going to be something that's always available to us.
Yeah, one of the things that I just had a conversation with somebody in the commercial real estate space, like my day job, and one of the things that they were asking, like, what company should we use to implement AI into our company? And it's like, well, you don't even have, it's not like a one size fits all thing. Like, hire some company and sprinkle AI dust on things and it works better. But a lot of the systems that you're already using and the processes, you can implement these one-off things, or just look at what that company is offering with AI running in the background. So yeah, I'm tracking with that.
Yeah, absolutely. I think this is where like finding specific tools that are industry specific are useful, because you could say, okay, well, we'll just use ChatGPT, Claude, Gemini, like to help us do a few things. But what we're having this big debate about right now is how a company's AI native. And AI native means different things to different people, right? Like, I think what AI native means isn't just we start working and then we make it better with AI. It might be like we start with AI and things that used to be routinely handled by people are going to become more and more like agent driven. And over time, we will manage the number of agents. AI native companies are going to build something first and then test it rather than, write it a PowerPoint deck and then like socialize the idea and then say, okay, now we're going to build it, right? Like people, so what AI native means is like a completely different culture of we're just going, the cost of building, the cost of compute and cognition allows us to just do more and focus on outcomes rather than just like the activity.
So you mentioned, ChatGPT, Claude, Gemini, all those
Hmm.
things. Are there any specific tools? They don't necessarily have to be AI focused, but things that in your life and your work that you use that have given you a leg up or made you more productive?
Yeah, I use all three of those to see what different results I get, and I like them. I also like use I've used Copilot. I use Beautiful AI or Gamma for presentations. I find that's really helpful for some of the work I do. Let's see. I actually like wrote and edited and edited and edited and edited my book more manually, despite loving AI. And part of my work really focuses on a venture builder called GAI Ventures, and there. We're using AI tools to help companies with outbound, and so we built that. There's also a product that we launched called Stella, and Stella is basically everybody's personal assistant. Like you can schedule meetings and use it to like take notes and to write an email for you and do stuff like that, which is pretty awesome. Just smaller examples. Grammarly is great. There are various meeting note takers that I think the world of. But I think that in the future, what people are saying is they need to like get their hands around everything. Everyone's just like, if AI is great, but if I didn't have to like answer so many emails, would that be awesome? Like there are email like answering agents. Like basically the communications overhead of our lives is expanding, and the amount of like agents and work is expanding. Email shows up in the 90s. People are like, oh, this is neat. And within 10 years, everybody hates it because they're just like, I'm just drowning in communication. Different tools. Stella is one, but there are others which I think are going to help us handle the problems that technology creates. We need technology to resolve like some of the problems that technology has produced.
So one of the things that the past little over a year, I've been working
Hmm.
HubSpot. I've worked in different CRM systems before, but with
Hmm.
HubSpot, and with AI, and then being able to, when certain requests come in, filter them in a different way. Like this one came in for this. So, okay, so it will get this response and a scheduled meeting for that. And if it has this, if they're interested in this, then send this one. And at first it started of, okay, let's A B test this. When it
Yeah,
comes in, how many people schedule when I send this message? How many people schedule when I send that message? And it's like, okay, we're going to go with this one for that and for this one for that. So now that took some manual work. And then after that, it's like, okay, so now it basically automatically filters that and it goes to the
yeah.
right place. And it has, populates with their name, their
Hmm.
company information, the scheduling link, it does all that. And then once it's in the system, it's in the pipeline, it can do the research. And then it was manual, like, okay, take this company, do this type of research. This is what I want to know to prep for the meeting. And so by that time, I come to the meeting and it's already, I mean, all I have to do is show up a little early and read through it. Obviously, I do it through,
Yeah.
I care. And we don't have that many that I need to, like, oh, this, that. But it's like, I go in, I read, I look through it and I go, okay, these are the questions. Is the person, is that, oh, okay. And I got it. And it's amazing. It's so efficient.
I mean, you hit the nail on the head, right? It's so efficient, and I think that's the goal is not for us to do more, but to actually get time back. And so I feel, going from activity to outcome based means it's like, did I get this done, and did you give me back time, right? When you make the pitch for this tool gives you 3 hours back a week, people are like, oh, I can do something in those 3 hours. But that'd be great, right? Or people using this have a 50% higher conversion rate because you know with machine learning or with certain generative AI tools, it either filters to the stuff they should really focus on, like really thinking 80/20, or maybe it generates better content that converts better, right? Like, so people are thinking what's an efficient use of my time and where is the ROI in terms of using tools, certainly for sales, but for automating back office, for thinking about, applications in accounting, compliance, like all kinds of things. And which is why, with GI Ventures, we're really thinking about what's going to change in financial services, commerce, and in enterprise productivity that allow us to put agentic solutions out there for people's workflows that allow them to do the work that they really want to do.
Well, Vijay, I'm extremely impressed by you and your trajectory and the things that you're doing, and more so like just how you're doing it, and that you even saying to be of service and use all the things that you've learned and you've developed in order to help people. Very, very impressive. Thank you for sharing your journey.
You're
I'm
very kind, Dustin.
Well, no, really, I'm going to share your the link to the book, the link to your website, and is there any other places that you want people to find you? LinkedIn,
Well, yeah,
Twitter?
the startup system Substack is a great way to follow ideas, things I'm writing about. I put out stuff on fundraising as well as leadership and things that come up. How you become a CEO. In other words, is there like one popular subject that I've been asked about and worked with leaders on and documented there. So yeah, I would love for folks to follow along at Substack.
Well, I know you got one here, and I'll make sure to share it with as many people. Before we sign off, is there
Yeah.
anything that we left out that you want to share? Any words of wisdom? Anything that you want to share? I know we covered a lot today.
I appreciate the entrepreneurial journey, having been on a couple times myself, and now working with so many people. Uh, keep going. That's it.
Yeah.
Just like keep going.
Yeah, yeah, it is fun. It is fun. As
Yeah,
frustrating it is, sometimes it's like, you're giving birth to an idea, to a concept, to the world, and it is fun. So, Vijay,
absolutely.
thank you again. It's been
Thank you.
wonderful.
Likewise. This is super fun.